What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. Before we dive into individual stock news, let's briefly figure out where we are from a macro perspective. US markets were closed on Monday in observance of Labor Day, and though this was a short trading week, it was still quite the eventful one with economic data. Job numbers were posted and the consumer price index, which is a proxy for inflation, came in hot. Well, what does that actually mean? For markets near term, simply put, more selling and profit taking as fund managers figure out what their next best move is going to be to maximize returns. That's essentially what we've seen all week. Longer term, not much at all. The bullish trend is still intact, despite a full week of red days. If you zoom out and take a macro view, we're still hovering at near record highs. All three major indices are tracking up and to the right of the screen. So seeing that I'm not a financial advisor, I do want to play you a short clip from somebody who is. So take a listen.
I find that the majority of the financial media is still talking to most market participants' parents. Like if you're 70 years old and you have too much equity in your portfolio relative to cash, relative to bonds, then yeah, it could be a minefield. But there are 73 million millennials now actively investing, another 75 million Gen Z coming into the market as quickly as they can, millions of new accounts a month. Most of the market participants today have decades ahead of them to invest in stocks, and they're not stupid. They recognize that lower prices are better to be buying than higher prices. It's not that there's never a good time to sell. It's that unless you've got a near-term use for the money, you want to be long equities, and it's better to buy them down than up. So this idea that, you know, we're heading into the fall and there's going to be a taper and maybe the Fed will make a mistake or somebody will give a speech someone else doesn't like. Yes, if you're over invested and too old to replace that money in your portfolio, you absolutely need to be vigilant. But I want to remind you, the majority of market participants today in 2021 are not in that situation. They're in the opposite situation. They require drawdowns in order to get better prices for long-term investments. And I think we want to speak to everybody at the same time. We don't just want to speak with people who are spending down the rest of their portfolio over the next 5 years. That's what most of the financial media tends to speak to because it's the audience they've known for a long time. It's really important that we look at downturns in the market as being good, not just universally negative.
Just straight savage. I don't always agree with Josh Brown, but he has been getting more forthcoming about the state of the financial media. This is funny to me because I've shared this notion of time horizon being everything, and why understanding the context in which fund managers in the media discuss investment advice is key. If you happen to be bored, go watch this video I posted on this exact topic earlier in the year, link in the description below. So with that in mind, let's get into today's topic. Virgin Galactic has announced further delay to their Unity 23 flight. I'll go over details of the press release published on Friday and offer my perspective on what this means to you, then get into why Neo dropped this week despite some pretty bullish news, and wrap up with a weekly performance review expressed in percentage gain or loss. If you haven't already, drop the video an early like as it greatly helps the content get pushed out to more people who may also benefit from the information, and it overall helps the channel grow. Let's get into it. It was just last weekend that I covered the news of Virgin Galactic Unity 23 flight being grounded by the FAA. You can click here and go watch if you missed that video. Now, a week later, we have an update on when we can actually expect Unity 23 to take place. Let's take a look at the press release. During preparation for the Unity 23 flight, a third-party supplier recently flagged a potential manufacturing defect in a component of the flight control actuation system that they supplied to Virgin Galactic. At this point, it is not yet known whether the defect is present in the company's vehicle and what, if any, repairs work may be needed. Out of an abundance of caution, and in line with Virgin Galactic's established safety procedures, the company is in the process of conducting inspections in partnership with the vendor. This issue is unrelated to the Unity 22 flight or the current FAA matter, which is focused on air traffic control, clearance, and communication. As a result, and pending resolution of the FAA matter, the earliest the company expects to open its flight window for Unity 23 is mid-October. A further update and specific flight window will be shared once the inspection is complete in coordination with the Italian Air Force. This was released after market closed Friday, September 10th, so it's fair to expect more downward pressure on the stock next week. And even more so if the macro environment does not improve. Space is hard, and we all know this. So personally, I would rather see some delays with some of these potentially safety impacting concerns addressed while we are on the ground, rather than it be a major malfunction or a catastrophic failure during a flight. As we head into next week, there is an upcoming event that could likely play into Virgin Galactic's favor. On September 15th, SpaceX is launching its first all-civilian Crew Dragon mission named Inspiration 4. These 4 individuals will spend 3 days orbiting Earth. When successful, this mission will make history, and by association, bring positive momentum to the entire commercial space industry. At a minimum, the positive sentiment around space could help keep the Virgin stock in the current trading range, in my opinion, and that's going to be in that low to mid 20s. Ultimately, at current prices, this would be a good entry point into the stock or a good level to add if you intend to go long. All right, so let's switch over to NEO, and the stock posted a weekly decline of 7.32%, and though it tried making a comeback, it really didn't get any traction. We literally came into the week free falling, and that is because NEO announced a at-the-market stock offering for $2 billion. That represents roughly 3% dilution to current shareholders. If you watch my videos on their Q2 earning call, you would remember that at the time, they were sitting on about $7.5 billion in cash and cash equivalent on their balance sheet. That's pretty substantial. So why do they need to raise more funds? Let's take a look at the press release for the reason they gave. The company currently plans to use the net proceeds from the at-the-market offering to further strengthen its balance sheet, as well as for general corporate purposes. Now, judging by the market reaction, you may be led to believe that this is negative, and I wouldn't blame you. That said, I have a different opinion. If you look back 3 months, it's been a downward trend. If you zoom out to year to date, NEO is actually down 22% from its all-time high and has been range bound. That said, I want to remind you again of my point earlier that the time horizon is everything if you want to fully understand where we are in the cycle. For context, NEO started 2020 at $3.51, entered 2021 at $58.92, and topped out at $66.99 around the March timeframe. That's a 19x return on your investment over that time period. Now, if you just focused on going back a year from Friday, NEO investors are actually up 114%, meaning they just over doubled their investment. The bottom line is this: the price rose exponentially in a relative short amount of time, and the company needs time to grow into its new valuation. So we won't be able to push significantly higher until some of the execution risk associated with expanding into the global market are behind us, right? And we have more clarity on when this chip shortage situation will resolve. Now, not everything is doom and gloom, and there's actually a pretty long list of reasons why you want to be bullish on NEO. And I've been saying for a while now that NEO is only second to Tesla. And as time goes on, it will become increasingly more evident to everyone else. Here are just a few reasons that dropped this week supporting my belief. Number 1, Tesla makes the safest cars on the road. The NEO ES8, launching in Norway next month, just received its 5-star safety rating by the European New Car Assessment Program. Number 2, Clean Technica, an automotive review magazine, just got their hands on the NEO ES8 and conducted their in-depth review. They were blown away, to say the least, and said, finally, somebody is on Tesla's level. And they added, it now seems to me that NEO could easily become one of the best-selling electric brands worldwide. Number 3, NEO confirmed that their ET7 flagship sedan will be the first model to launch in Germany towards the close of 2022. The ET7 was designed to squarely take on the likes of BMW, Audi, Mercedes. Launching its ET7 in Germany shows a high level of confidence on NEO's end that they have a winning product. Number 4, but not the least, I've covered the partnership between Intel Mobileye and NEO in previous videos, and though the article doesn't formally mention NEO, notice anything interesting here? That's right, Intel Mobileye, flagship autonomous service for robotaxi, rolling out in Germany next year, will utilize the NEO ES8 SUV. Now, bringing it full circle, there's always going to be some near-term noise, right? I'm actually more encouraged that the management team had the foresight of realizing that their stock price is in a relative position of strength right now and decided to raise capital now to minimize dilution to shareholders. At the end of the day, this is what it all comes down to as far as I'm concerned. NEO has an easy 10x in between now and 2025. And don't forget that entry into the US market will likely happen no later than 2024. So between the crypto flash crash on Tuesday and the discounts the current macro environment is dishing out for everyone, my plan is simple. And actually, this is a great segue into the weekly performance review expressed in percentage gain or loss. Last week, I was up by just over 10.5% and things were looking great. Now, fast forward to this week, and the account saw a total decline of 12.48%. So net, I actually took a step backwards. Now, what did I do about that? Just 1 second, hold on. I ordered some Hado noodles. Why? Well, because I bought the dip where discounts were the most significant, and I will continue to be opportunistic when there is at least a minimum of a 6% pullback in any given stocks, or I see a 15% minimum correction in the crypto positions that I'm into. Now again, this isn't for you to take as financial advice. These rules are simply part of some of the guiding principles I've established and follow. And if I can't buy, I'll simply hold unless there's a much better opportunity, at which point I'll shift some gains towards that. No different than the move to Hive blockchain I've mentioned on the channel before. And with that, this will do it for today's video. Hopefully you found the content insightful. If so, please drop the video a like and share with others, as it greatly helps the channel grow. For my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss out on any future content just like this. As a reminder, I post every Sunday and now on most Thursdays for more crypto-focused content. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one. Oh, and by the way, they're not paying me for this, right? I'm just excited to eat it. So see you in the next one.